Hey everybody, I'm Norris. It's Friday, December 18th, and interest rates are up. Are your buyers freaking out, or are they going to finally jump off the fence in 2016? That and much more as we cover the biggest headlines in real estate. November real estate sales were down 8.6% in California and below 400,000 for the first time in 8 months. Some of that can be blamed on TRID, which came out in October, but the California Association of Realtors says there's actually less inventory for sale as well. Unsold inventory index rose for the first time in 4 months, now at 4.2 months of inventory, and statewide the median price was down 0.2% month over month and now stands at $475,000. The National Association of Home Builders reported a 1-point decrease in builder confidence, now at 61, and the housing starts in single-family homes increased 10.5% according to the U.S. Department of Housing and Urban Development. High home prices and weak wage growth isn't just putting a squeeze on millennials. According to Harvard University's Joint Center for Housing Studies, they released a survey showing that 51% of the rental market are actually for those 40 and older. The report shows that previous homeowners that lost their homes during the bust have not returned as buyers, and that age group is largely middle-aged, and baby boomers are also making a hefty portion of those renters, and the increased rents are really causing a squeeze on fixed budgets, so it's really going to be interesting to see. If you didn't hear Leslie Appleton Young on I Survive Real Estate, she also brings up that point for high dollar areas with some of our older generation not being able to get out or doing what they'd like to do because of high prices. Better check that out. The American Enterprise Institute says that mortgage risk for first-time and repeat home buyers is widening. Despite everything we're hearing about tight credit, AEI says we're just not looking at the facts, apparently. In November 2015, 70% of first-time buyers had combined loan-to-value of 95% or above compared to only 44% of repeat buyers, and 21% of first-time buyers had less than a 660 credit score compared to 11% of repeat buyers. So we're still ways off from where we were in 2005 and 2006, but we keep moving towards a more loosened credit guideline, and that shows up in the next story as well. FHFA is looking into requiring the GSEs to offer funding for very low, and moderate income families in 3 underserved markets, including manufactured housing, affordable housing preservation, and rural housing. These loans historically have not performed very well. They tried this 5 years ago to release this, but apparently it was just too soon after the bust and that fell through. They are now taking comments for the next 90 days on how this would look moving forward, and the GSEs would build it into their plan. Last week we talked about the Fed ditching sole reliance on the FICO score because it didn't take into consideration potential buyers like paying their rent on time, so they're looking at other methods. So all this work on Dodd-Frank, QM, and the like, and it's clear that the government maybe feels that they've overreached with Dodd-Frank, so they're trying to figure out creative ways to make guidelines a little bit more easy to let more people in. The massive real estate meltdown that saw major companies collapse, people losing their life savings, and millions facing foreclosure is now a Christmas comedy for the whole family. Paramount bought the rights to Michael Lewis's book, The Big Short, and decided to tell the dark tale of corruption and collapse in a comedy featuring Steve Carell, Christian Bale, Ryan Gosling, and Brad Pitt, a hilarious, handsome crew. So far, the ratings by critics and viewers have been actually really strong, and there's already talks of awards next season. Previous Wall Street-themed movies didn't garner much attention at the box office, didn't make much money, but they're hoping the comedy twist makes a little bit more traction and a lot more money for Paramount, and I'm probably going to end up watching it, and it's going to be very interesting to see how they do that. After long await, the Fed finally decided to raise interest rates 25 basis points this week. Many in the real estate industry just don't think it's going to make that much of a negative impact, and the California Association of Realtors actually thinks it's going to push some buyers off the fence in 2016. What do you think? Are your buyers freaking out now that prices are up and interest rates are also starting to go up? Are they feeling that they're missing the boat, or are they going to back off and say, never mind, it's too expensive? I would love to see what you're hearing. If you're on YouTube, don't forget to subscribe and like the video and leave your comment below. If you're on Facebook, like and please subscribe to the Norris Group. I'd love to hear what you have to say about your buyers and interest rates below. Up on the radio show this week, a really important topic that's been really interesting, I've been following it quite a bit, is the HERO program. If you're not familiar with it, it allows consumers to get basically a home loan to do energy efficiency upgrades, but there's been a lot of flack because it supplants first position for loans. It's tacked onto the annual property taxes. It's really high interest rates, and it's easy for some consumers to get taken advantage of. You definitely don't want to miss the next two because it has caused deals to go south for some of our investors. investors, and realtors are actually having a hard time selling some of these properties as well, so you won't want to miss that. January 5th, we are going to be back on the trail doing stay put, cash out, or change seats. We're speaking quite a bit in January in most major cities in Southern California. January 5th is going to be in LA. January 12th, we're going to be out in Coachella Valley with CV RIA, and the 14th, we're going to be doing the Los Angeles Real Estate Summit back in LA. The 19th, we're going to be in Orange County. January 21st, we're going to be doing it with AOA in Los Angeles, and we will be back in San Diego. Please check out our calendar because we're going to be all over the place in January. And don't forget, February 6th is cashing in on a boom, Quadrant 4 strategies, working in the current market. If you're having a hard time finding deals, these are strategies that are most likely going to work for you in 2016. Information on hard money loans, including fix and flip, buy and hold, and new construction that start at just 6.9%. That's amazing. Check out thenorrisgroup.com, or if you're interested in passive investing with the Norris Group, check out tngtrustdeeds.com. With that, have a fantastic weekend, and we'll see you next week.